So let's go ahead and start with your pick of the week. Looks like you're saying earnings play volatility crush in Bank of America, ticker symbol BAC. What are you thinking there?
Well, first of all, next week we get back into earnings season, right? The banks report next week, and then for the next 3 to 4 weeks, we've got all sorts of reporting happening. And it's looking like this is going to be a great earnings season for our calendar spread play. So here's Bank of America. I've got the chart up right here. Earnings is going to be, if I put my cursor right here, before market open on July 16th. So, you know what? On July 15th, we want to think about doing our calendar spread. Remember, a calendar spread is a trade that works on volatility crush. And what we know is leading to earnings, volatility pops up. And then the day after earnings is released and all the unknowns are now known, we always see a volatility crush. It's like clockwork. And so we look for these symbols that don't usually have any sort of movement. If we look at previous earnings that Bank of America has been through, the day after is usually a nothing burger. And so the scoop is those are the ones that are going to profit the most on calendar spreads. So my first trade on Bank of America is to look how I could do a calendar spread to profit on Bank of America's earnings play. The second one is you will notice, and I'm going to zoom out a little bit on this particular view here. I'm going to go to 6 months. You'll notice that I have Bank of America in this trend. And so one of the things that I'm looking at as well, I'm going to use a overbought, oversold leading indicator. It's one of my favorite. It's the Williams percent R, made popular by Larry Williams. And this is one of those ones that you were talking about in the beginning of this call, Sip, about, should we trade the pullback? What the Williams percent R tells us is if we've had enough pullback to get a swing trade out of it. And you'll see right now, the Williams percent R is trading down at 93, almost 94. You see this blue number that I'm circling here with my cursor, 93. Anything below that 90 number tells you that it has pulled back enough. So what we're looking for is a confirmation that the swing is starting. And so what I look for, you can actually program one of our free indicators to do this. I'm going to do it right now in front of you. This is how you program the free indicator to identify confirmations of a swing trade. What I like to do is I actually like to change my 3-day exponential on the fast length down to a 1-day simple. That basically means the closing price. And I like to know when it crosses the 7-day simple. So by simply changing that configuration of the moving average crossing, you'll now see whenever you get the green arrow, and that's what we're looking for. When we get that green arrow, that's an end of day signal. The next day we look to trade this and take advantage of the swing trade up. You can use an option that is maybe 3 to 6 months out. Maybe 1 or 2 steps in the money. That would be a stock replacement play. If you want to get really elegant, you can use an out of the money option. Again, I'd still go with the 3 to 6 month out expiration date. But yeah, those 2 trades on Bank of America. In the immediate, looking for an earnings play, volatility crush play with a calendar spread. And then for the bigger play, let's watch for a swing trade confirmation and make some money on the way up.
And if you want to see a couple more examples of the volatility rush and crush, head on over to the YouTube, go to our page, just search rush or crush. We should have a couple of examples of how to approach this in the past. With an expert on this approach, I believe a few times as previous guests. So that's the time of the year, and then maybe this is where the opportunities are as we continue to hit our head against these new highs is in these earnings plays, which I know can pan out fairly nicely, as we've shown in the past. So that's AJ's pick of the week, ticker symbol BAC.